Thank you for joining us tonight. My name is Yitz Wiener from Nefesh B'Nefesh, the Answers and Advocacy Department. We're going to get started in 1 second. I'll introduce our guest speaker in a minute. If possible, any questions that come up during this webinar, please put in the Q&A section of the that's on your screen, not the chat. This way, we're going to try and answer all the questions that are in the Q&A at the end of the presentation here. If we don't get to your question or we don't answer it, then I will give out our contact information. Please do send me an email with the question, specifically what you're looking for, and we will have Moshe, our expert, answer them and get back to you with the answers. So without further ado, I'll introduce Moshe Wilshinsky, the CEO of Movil Mortgage and Finance. Welcome, Moshe. How are you?
Very good. Thank you very much for having me.
Thank you. It's our pleasure. So tonight we're going to talk a little bit about some of the changes or things that are going on in the mortgage world here in Israel. There seems to be a lot of turmoil in the mortgage world right now. Some things are more publicly discussed on the news than others. But what can you tell us about some of the main issues affecting these Israeli mortgage borrowers?
We have a couple of factors, but let's talk about a logistical thing that's happening that's actually a bit of a shocker for everybody, because during COVID, a lot of people got deferrals of their payments, and some of these deferrals were for 75% of their monthly payment. And the last of those just ended last month. So for some people, they saw their payment, albeit going back to what it was, that increase by more than a factor of 4, because when they got that deferral, if they had an adjustable rate, the interest rate that they had that time versus what they have now is significantly different. So it was a double whammy. It was going back to a previously regular monthly payment, which for the past 2 years they hadn't been paying.
Right.
And when it went back, besides the interest that was deferred, the interest rates were much higher. But that sort of brings us to the underlying factor, which isn't affecting just Israel. Really, the whole world right now is experiencing inflation in a way that it hasn't seen, in a long, long time.
Sure.
And that's affecting the world over. The U.S. in particular has seen a significant increase in interest rates, and it has happened so quickly that is literally unprecedented. And it has affected both short-term and long-term rates, and has created a situation that's known as an inverse yield curve, which is simply put, that means that the short-term interest rates, meaning the 3 months, 1 year, 2 year, 3 year, 5 year, are actually, those interest rates are higher than, let's say, a 30-year rate. So under normal circumstances, it's just the opposite.
Oh, I see.
Rates are lower and the long-term rates are higher. And that's basically one of the things this means is just means that the investors in the market, everybody's expecting, is more worried about the short-term interest rates going up than long-term. But this has created a number of issues for Israeli borrowers. So first and foremost, because of the underlying issue with inflation, we have a lot of borrowers that have mortgages, whether it's a quote unquote fixed rate or an adjustable rate. If it's linked to inflation, they have seen their payment increase, maybe not very significantly, but increase. What they don't realize, what has increased very significantly, is the amount of money they owe every month. So in addition to the amount of money that they're paying every month, they owe an additional amount. And because they're not paying it, it's being added to the principal, which means they could end up owing more than they originally borrowed. It's known as negative amortization. So that's a factor we haven't seen in a while, and that's something that's a percentage. I would say a significant percentage of borrowers, depending when they got their mortgage, may be on some part of their mortgage, may be experiencing that. The The other issue is adjustable rate mortgages. So, um, one of the most popular indexes is the Bank of Israel prime rate. And that is something, especially during COVID, the Bank of Israel actually increased the ability to use it. So it went from being restricted to one third, they allowed it to go to two thirds. And just to keep everything in perspective, a year ago, the Bank of Israel prime rate was this is the prime rate that the banks use, was 1.6% on an annual basis. Today,
Okay.
it's 5.25%. Just so you understand the scale of the increase.
Wow, that's a big increase in just
It's a
the
big
prime rate
increase.
itself.
And there's a lot of borrowers with that in their as part of their mortgage.
Right.
Now there are a lot of borrowers that for one reason or another have a portion of their mortgage, possibly depending when they got it, maybe even all their mortgage, that's adjustable rate linked to the US dollar, which is usually either a 3 month or a 6 month adjustable. And again, there are mortgages they could have gotten a mortgage in dollars itself, a very very small percentage of the mortgage so that way, but regardless, same rate, and it was known as the LIBOR rate, depending when they got it. Right, if they got
Mhm.
it in 2022, they were already on the new index called the SOFR, and I'll speak about that in a little bit, that
Okay, great.
change, but just again in perspective, going back a year or so, that 3 month LIBOR was 0.37%, right? So that that was a rate, and it was somewhere between there um, for many years, somewhere between a quarter of a percent to maybe a half a percent for many years. It was in that range. Today, that 3 month rate is 4.85%. Again, in perspective, you can see the increase. In
Sure. So
addition,
that's a big increase in these variable type loans, either linked
yes,
to the Israeli prime or in this case, which you said is less common, but nonetheless there are people who have these linked to the dollar, to the U.S. dollar
correct,
mortgages.
correct. And the people that are borrowing that have the dollar linked, the other thing they're experiencing, which we haven't seen in a very long time, is a strong dollar.
Hmm.
So the amount of shekels they're paying per month is more
There's more.
because the dollar is increased. So they're
Wow, a
getting
lot of changes here. A lot of
yeah,
potential changes
they're getting they're getting hit on both sides. And
on all
again,
sides.
the um, uh, there are, to a lesser extent, the same is true for people that borrowed linked to the euro. Again, interest rates from where they were to where they are now is, there's a significant difference. Now, it is it is interesting to note that we've had unprecedented world events over the past 3 years. And because of that, there was a delay. And for the most part, it just wasn't paid attention to in the mass media, that LIBOR, which over the past 30 some odd years had been a very, very popular um, adjustable interest rate index used for everything from government loans to mortgages around the world, is being discontinued or was discontinued, depending on the term and the type and the currency. So, for example, in Israel, banks stopped making LIBOR indexed loans in the end of 2021. And for people that had gotten mortgages prior to that, that were linked to LIBOR, depending the bank and depending when they got it, they've either already switched to what's called SOFR, or they're going to switch. Um, the 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 difference is not that material when it comes to the rate, and everybody's waiting to see what the difference is. But it is something that I think if we hadn't gone through the COVID-19 and everything else, there would have been a lot more coverage, and consumers would have paid a lot more attention to it.
Right. It's interesting how all these changes were benefits, or not all of them, but some of them were made as benefits during COVID to help people. And as you said, other things may have risen to the occasion, or to the headlines, and therefore people have not been noticing the reasonings behind some of these changes, but maybe just realizing that their monthly payments have gone up.
Right.
So this is definitely very helpful in understanding why. Just one quick question about the LIBOR and the SOFR that you mentioned. People who have those kind of loans, are the banks going to switch them over to that on their own, or
They
a person has to reach
the
out to the bank?
no, the SOFR index by some of the banks have already been replaced, or they've gotten a notice and it's been replaced, and others it will be replaced. Depending on the bank, it's either being done automatically or the bank is sending a notice. But one way or the other, bank is either gonna be proactive about it or they're just gonna do it.
I see. Okay, good. That's very
Again,
helpful.
there's notices, people are gonna get notices that are either they have to respond to, they have to do something about, or they're just getting notices that a matter of information that it was done.
Okay,
For most people, they probably will not really notice anything material.
I see. Unless they look at the fine print and see the index itself,
The name, yeah.
the name of the index. Okay. Something that is a lot more common for Israeli borrowers is mortgages that are linked to inflation. And I think that it's very helpful, especially for people who are on this webinar who may be thinking about mortgages in the next year or two or whenever. This term will come up. It is often offered by the banks or by a mortgage broker, or at least brought up as something to discuss. So, Moshe, can you talk a little bit about that and explain what those are and how they are being affected now, and how that too can change somebody's monthly payment, whether it's now or in a future transaction that they enter.
Sure. I think it's worthwhile to have take a little bit of perspective to understand why we have these things. And I always say the Israeli mortgage market in international terms is very, very young. Um, in Prior to 1990, all the mortgage funds were basically government. Banks were basically just handling and facilitating the making of the mortgage and then collecting the payments, et cetera. But it was all government money. And if you remember in the 70s and 80s in Israel, there was hyperinflation, and everything from income to debt was linked to inflation. And that's something that, so 19 in the early 90s, the government was still funding a majority of the mortgages. By the end of the 90s, it was the banks.
Hmm.
And those fixed rates that were linked to inflation still held, they were still common. And even today, they're still common. And what it means is you could either have an adjustable rate or a fixed rate. And if it's, let's just talk about the fixed rate, because theoretically, if you think if it's a fixed rate, it's a fixed rate.
Right.
But it's actually what, for anybody that's invested in U.S. inflation-linked bonds, you're getting a real interest, meaning you're getting an interest that is above inflation. So if you borrow at 3.8% and inflation is 5%, effectively, it's costing you 8.5%.
Wow.
So that is those mortgages, as we mentioned before, they're adjusted every month based on the inflation. So if it's an adjustable, it's also getting adjusted based on whatever the adjustment period is. And one of the factors is that it is the amount you're paying every month is not necessarily the amount you owe every month. So it's accruing. Now, keep in mind the only government mortgage, meaning non-bank funds, that are going on today is what is referred to as zakut, which is part of the either the benefits that an Oleg gets when they make aliyah, or every Israeli first-time home buyer has aliyah rights. And there is a point system that takes many, many things into consideration, both for the Israeli that grew up here, at what everything from their army service, siblings, etc., to an Oleh, and that point system determines the amount. Again, in context, the amount with all the points, the maximum amount is still less than 400,000 shekels. And considering that the average mortgage is somewhere around 1 million shekels, it's not something that is very popular today. In fact, I don't have exact numbers, but I believe we're still in the single digits. In other words, of all the mortgages that are issued, I think we're in single digits in terms of that zakaut being funded. So, for every 100 mortgages that are funded, we probably have less than 10 that actually have zakaut.
And that 400,000, if I understood correctly, would be being the highest, and is probably significantly higher than most Olim would qualify for, simply because of the nature of the point system, where some
Correct.
of these things have to do with more veteran,
Correct.
or
Correct.
Israelis who are not Olim.
Correct. It's the maximum amount is in the 300s. I'm saying less than 400 because there are various circumstances, but um, I haven't clients. It's the type of situation it's very rare, but when it has come up, I have not seen an Ole um, get more than 200,000, etc. Possibly if somebody made Aliyah young, they served in the army, etc. But again, there is a point system. There's a calculator that's available. Keep in mind that these mortgages are all linked to inflation. In other words, with this zakut, the government does not have a long-term fix that is not linked to inflation. There's definitely talk of change, etc. But that's currently that is the situation, to the best of my knowledge.
Okay, thank you. Which is very helpful information, for anybody considering a mortgage in the near future. That A, this zakaut, and B, in general, the mortgages that are offered that are called fixed but linked to inflation aren't in fact really 100% fixed, and it's really something to pay attention to. And I think Moshe explained very clearly the potential risks in an inflation linked mortgage, and it's really something worth paying attention to. I'd like to also add that very often, Moshe, when I get calls from people in the post Aliyah world that are asking about the mortgage benefits, they come prepared with the knowledge that they have certain benefits, and the mortgage one is one of them. So I often find myself describing to them some of the information that you shared. Obviously, I don't know all that the same stuff, but I find myself sharing with them that it is a relatively small amount of the benefit of their mortgage, because of this point system, and and that it is in fact linked to inflation. And very often it seems that for Olim, while there is this benefit on paper, it's not the greatest benefit or the most worthwhile benefit that's to utilize, because of the potential risks and the small amount. And I just think it's something that seems to be common from a lot of Olim who reach out to talk about that and ask about that. And I think that anybody who's on this webinar tonight watching, if you ever do want to ask questions about the mortgage benefit, obviously, you can reach out to us. I'll put out the answers and advocacy contact information in the chat as we move on. And please, I do encourage anybody to reach out to talk about that. But you'll see that as you go through your list of benefits and look at this one, hopefully this will help educate you that, while it's worth discussing and hearing about, it is not necessarily the greatest benefit to use for an OLA.
Yeah, I
Okay.
think I think it's a good point because, like we'll see, um, everything is a very is a case by case situation. So there are situations where it can be beneficial, could help somebody qualify, but as you said, for especially for somebody coming from North America, their expectations, and for the most part, if they're depending on the price range of apartment they're looking at, a mortgage that, given the size of the Zakud, it may not be a major factor for them, and it may make more sense just to get straight bank financing.
Right. Okay. Understood. So, we touched on a couple of these changes that have occurred and, whether they were known to the homeowners or not. What kind of possible solutions are there now for homeowners, for, people with existing mortgages? Is refinancing a good option now? Is it harder to qualify today than it was possibly in the past?
Well, so refinancing is a very individual decision. It really depends, and there's a number of factors that people have to keep in mind. And to address your question about qualification, yeah, just by fact of the increases that we've talked about, um, it means that the income requirements to qualify now are higher than what they were possibly when originally got the mortgage. But it really depends on the situations, um, and it's important to note a couple of categorical differences between the North America, as particularly the U.S. market, and in Israel, because one of the things that we have to keep in mind is that in North America, whether you're in Canada, US, when you get a mortgage, it's all the entire mortgage is one set of terms. You don't have a mortgage with multiple parts like you do here. I mean, in Israel, it's very common to have a mortgage with three parts, sometimes more. So, let's say in the U.S., because of where rates have been the past 15 years, many people, I would say, significant majority of people, have refinanced their adjustable rates with fixed rates. So their entire mortgage now is a fixed rate. And when rates did drop, if they wanted to refinance it, they would refinance it. In Israel, you have two factors that make it much different. One, we have multiple parts. So you could have a part of your mortgage that is fixed, and you could have a part of your mortgage that is one of these adjustables that we've talked about. And you want to get rid of that adjustable. So in 99% of the cases, if you want to refinance just that part, you're going to have to do it with your bank that you did it with. You don't have to do it with the same branch, but you have to do it
Uh,
with that same bank, because I'm not saying 100% because there are some exceptions, right? But you usually 99% of the time you're going to have to go back to the same bank to refinance the other part, unless you want to refinance the whole thing. And if you do refinance the whole thing, and let's say you got a fixed rate 10 years ago, and today the fixed rates are actually lower than what they were 10 years ago, you are going to be subject to a prepayment penalty. In North America, prepayment penalties, again, one of the differences that Canadian and US markets, the US market, you have the 30-year fixed. In the US market, it's very, very, very rare that after 3, 4, 5 years you still have any type of prepayment penalty. If there is any prepayment penalty, it's usually in the first few years. In Israel, if you have a 30-year fixed rate, you have the potential for a prepayment penalty over that entire 30 years. The idea is, if you want to refinance when rates are low in the current market are lower than your mortgage rate, which is usually the motivation to refinance,
right.
there is a prepayment penalty of some sort. There are discounts second, third, and fourth year, but there is a prepayment penalty that you have to keep in mind. So it's something that you really have to look at case by case, and it's something that each person needs to assess their situation, and what their tolerance of risk is. Just an example is, let's say somebody 7 years ago got a mortgage, and
Okay.
at that time, they were employed by a US company and they were being paid in US dollars. So they got a portion of their mortgage in US dollars. Knows that 3 month adjustable shekel linked to the US dollar. Now, 7 years later, they no longer have that job and their income today is totally in shekels, right? Or if same type of scenario, but somebody had a investment that they were expecting to uh, sell, and that was going to give them in within so many years a chunk of money in dollars that they wanted to basically use to pay off their mortgage or that portion of the mortgage. So again, they did it with that portion of the mortgage linked to the US dollar. Now, 7 years later, that never materialized for whatever happened. Maybe it's postponed, whatever the case may be. That's a reason for somebody to reassess, right?
Absolutely.
Because it could be worthwhile for them to go to shekels. Keep in mind, and we're not getting into financial advice, but there are two factors that we always have to look at. And if somebody is talking about borrowing in a foreign linked to a foreign currency, is there's obviously the interest rate, but there's the currency, right? So there's currency risk and there's interest rate risk. Right now in Israel, no, we used to be able to get long-term fixed rate mortgages in dollars, right? We can't do that in any foreign currency. So if you're going to borrow in foreign linked to a foreign currency, so you're hedging that currency risk, let's say because you have either income or you have assets,
Sure.
you're going to be exposed to the interest rate risk. So it's worthwhile, assessing these things, or somebody could just decide, you know what, rates are where they are right now, and I'd rather take a fixed rate now and just know that, it's done. Everybody, it's a very, very subjective thing, and everybody has to establish their own level of risk and assess and decide. That's one of the many factors that goes into the refinance decision.
I see. Okay, that was very clear. Thank you. As you said, I think the prepayment penalty factor is something that is probably new or uncommon for most North American olim. And interestingly enough, I wonder how many people even knew that they had or potentially had a prepayment penalty on those first, 1 or 2 years, if they had anything at all. Most people don't obviously sell or refinance that quickly, but um, I think the concept of having it for the entire length of the loan is something that is new and maybe slightly difficult to grasp and understand, but like many other things, this is one of those things that are just different here than elsewhere, or specifically than North America. And I think it's very important that um, anybody looking to take a mortgage moving forward, please God, everybody should buy a home, and should they need a mortgage, it's really worthwhile speaking to a professional, not just the bank clerk or the bank teller going over the mortgage with you. Rather, there are mortgage specialists out there who such as you, Moshe, but who can really explain in English to a North American the differences between a mortgage there and here, and kind of the things that are important to pay attention to before signing, such an important thing.
Yeah, I wholeheartedly agree with you. I mean, there's really everybody has to prepare themselves for a educational process, and just again, it's important to remember in both in Canada and the U.S. and the average Canadian mortgage borrower who's gone through the process there a couple of times probably is a little more familiar with prepayment penalties than a U.S. mortgage borrower. But in both markets, you're talking about markets that have evolved over very, very long periods of time. Israel's market in in perspective, is very, very young. So we're still evolving, and it's a work in progress. So, and I think actually on a positive note, there's been a number of developments recently, um, some, more recently than others, that are actually very positive. Over the past few years, we've seen a real reverse mortgage market evolve with multiple players, competition, et cetera. So, um, older borrowers can actually get access to mortgages that are really suited for them. Um, and that was not available, 10 years ago. It was a very, very limited market, right? The other thing that is very, very new, which I've spoken about many times before, that in the US and in Canada, you have 50, 60, 70 years of regulation of disclosure, that basically the government requires the industry and everybody in the industry to not assume the borrower understands, but really spell things out as clearly as possible, and making sure that things are done so that regardless, the information is put in such a way that at least the borrower can be cognizant of what's going on. Um, the Again, I think he came into sort of, his feet were put on the fire because we had one crisis internationally after another. But the new governor, the Bank of Israel, had introduced a really incredible change. And I've been involved in the mortgage market here since the early 90s, and which is pretty much when it started. And I have not seen something so positive. He did something that is one of the most positive and significant steps in terms of mortgage disclosure than any other anybody else in this position. And that literally was introduced 2 months ago. So we're definitely heading in the right direction.
Wow, that's great. That's great. I think before we continue, I just wanted to say to anybody who's all of our participants here, if you do have any questions that you want us to address, please do put it in the Q&A section that's on the bottom of the screen next to in the chat area or the participants. It's not the chat section, rather its own section of Q&A. And as soon as we are done speaking, we will be happy to address any questions that come up there. Moshe, we did get a question. Maybe you want to mention
Yeah,
it and touch on that?
I over the years, there was actually a client that actually mentioned in his book what I'm about to say. And I always tell people that the mortgage process here is something they should take a lot of time to educate themselves about. In other words, the pre-qualification is a good idea in America and in Canada, right? Here, it's a must, because it's not just pre-qualification. It is also really understanding these things at your own pace, in your own time, and that helps you decide what you want to buy and how much. And it's very important to understand the ramifications. And again, the market here is very young. It's like there's a lot of nice bankers. But it is a different environment, meaning what let's say an American borrower is used to, from Regulation Z, the APR that they get on everything, right? And that information they may not even notice anymore, but they see it. And here it's doesn't exist yet, right? So everybody should give themselves plenty of time to really educate themselves and be comfortable, as opposed to buying something. Because when you sign a contract here, unlike North America, there's no contingencies. So education, taking time. If somebody is planning and buying in the next year to 18 months, now is when they should start.
Okay, great. Very helpful. Thank you. Okay, I don't see any more questions being asked right now. I think we will give that another couple of minutes just to see if any of the participants here do have any questions. Please do write them in the Q&A. I did put in the chat the contact information for the Answers and Advocacy Department at Nefesh B'Nefesh, the post Aliyah department. As I said earlier, that's often where mortgage related questions do come up. And, we're happy to answer what we know. Um, Whatever we don't know, we often ask professionals such as Moshe to give us insight and answers in order to really give the right and accurate information. We just don't know everything. Obviously, I encourage anybody who has any questions to feel free to reach out to Moshe as well. I can share his contact information as well in the chat. And of course, anybody who doesn't see it or doesn't have a chance to write it down now, I will have it handy and be happy to share it with you. Okay, a couple more questions came in, so let me address those. Like I said, I will share Moshe's information in the chat. First of all, somebody mentioned that they don't see anything in the chat. Let me know if that changed now. Okay. And in a second, let me address that second question. Can you go over the Aliyah rights regarding mortgages? Sure. Moshe, do you want to answer that, or would you like me to answer that?
I think the short answer is that really you have to calculate the points. But the scope of the mortgage, the amount of mortgage you're talking about is most likely going to be somewhere on the high side between 200, 300,000 shekels, maybe a little more if you were young in the army here. But
Okay, so I think we touched on it, both yourself and what I was sharing, that the main benefit for that's related to Aliyah is in fact this point system. It's worth looking at online, Googling it, trying to get the calculator. We do have it on our website. Usually, right now, that page is actually being updated, so it's not handy. But I'm pretty sure that you can Google the calculator and sort of just plug in your information and kind of see what kind of points you would score, for lack of a better word, and try and get an idea of what kind of a mortgage of the zakaut, as Moshe mentioned earlier, you would be entitled to. Okay.
I would say it's important for somebody to understand their overall, their overall perspective, because the alternatives, you can get in Israel, you can get a long-term fixed rate that is not linked to inflation. So it's a nominal rate, just like you have in Canada and the U.S. And what the government mortgages are linked to inflation, so you have to be ready for that.
Okay, good. I did fix the chat thing for whoever mentioned it. Thank you. I did put Moshe's contact information there. Please do feel free to reach out to him. Okay, Moshe, thank you very much for your information, for your time, the insight. It was very, very helpful. I learned a lot myself. I hope that anybody listening benefited from this as well and was able to really learn something. Thank you, and good night.
My
Good night to
pleasure. And
everybody.
I encourage anybody, if they want to speak about their particular situation, feel free to reach out.
Great. Thank you.
All right.
Good night.
Take